Okay, here's a question for you. Is getting invited to the biggest party in town really worth it if the house itself feels like it's built on shaky ground? For one wildly popular trading app, that's not just, a hypothetical. It's a billion-dollar reality playing out right now. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. For this deep dive, we're zeroing in on Robinhood markets, ticker symbol HOOD. We're using our research captured on September 8, 2025 to really uncover what's truly happening beneath all the headlines.
Yeah, and this morning, the market's waking up with a kind of interesting mix. You're seeing pre-market futures pointing, green. S&P, NASDAQ, Q ticking up. Asian markets look pretty solid too. But while that surface optimism is definitely there, our research shows this distinct uneasy undercurrent. Economists, they're issuing some pretty serious warnings, talking about the U.S. economy teetering on the edge of recession. They're citing sluggish consumer spending and the weakest job recruitment pace we've seen since 2020. So yeah, that shaky ground you mentioned, it feels very real in the bigger picture of the macro environment.
That's quite the backdrop, isn't it? Market looks okay on the surface, but maybe an economic headache brewing underneath. And right into that complicated picture, Robinhood walks in with some truly massive news. So this golden ticket getting added to the S&P 500 index effective September 22nd. How does that fit in? Is it enough to counter those bigger worries?
It's definitely a powerful short-term catalyst, no doubt about it. Getting into the S&P 500, it's a major stamp of legitimacy. Creates guaranteed demand, right, from all those index funds, those huge ones, that just automatically buy everything in the S&P 500. They have to buy Robinhood shares now. However, what's fascinating is the counterpoint. When we look at the fundamentals from our analysis, it suggests the stock is significantly overvalued. Based on cash generation, our fair value estimate is way down at $50.80. Based on earnings, even lower, $20.24. And that's a long, long way from its current price tag, which is over $100. Even Wall Street analysts, mostly they're saying buy over 60%, but you see some caution creeping in. The strong buy ratings have slipped, and hold and sell ratings, they've actually increased over the last 3 months.
Wow, okay. That is a stark contrast. Over $100 versus fair values of $50 or even $20. So, all right, with that fundamental picture looking kind of stretched, how are traders actually betting on this stock right now? Does the options market show this conflict, or is everyone just jumping on the S&P train?
Interestingly, the options market, at least on a short-term basis, is notably bullish, really bullish. We're seeing a very low put-to-call ratio. It's down to 0.32. That basically means traders are placing way more bets on the stock going up, those are the calls, than going down, the puts. The most popular bet seems to be for the stock to stay above $103. And the biggest sort of defensive line where the bulls are digging in, that looked like $90.
So lots of optimism, at least in the options crowd. But if we connect this back to that bigger picture, is everyone on board? Or are there groups still betting against Robinhood, even with this huge S&P news?
Well, absolutely. There's definitely a counter-narrative building. You can see in a couple of key places. First, short sellers. They're active. About 4.12% of the available shares are sold short right now. Now, that's a meaningful group putting actual money down, betting the stock will drop. They're betting against the hype. And then there's a technical picture from our research. Now, the long-term trend looks healthy enough, but the short-term trend, that's actually reversed since mid-August. It's showing lower highs and lower lows. That's a classic technical signal, suggesting momentum is kind of feeding. Each rally isn't quite making it past the last one. And crucially, these recent price drops, they've come with significant volume. That often indicates money flowing out. Momentum's been stalling in bearish territory for weeks now. And volatility, that's picking up too, suggesting maybe the market isn't quite so sure anymore.
Okay, so wow. On one hand, Robinhood gets the VIP invite to the S&P 500 party. Huge news. But on the other hand, the foundations, the valuation, the short-term momentum, the broader economy, they all look a bit like that shaky ground we started with. So this raises a really important question. What's the strategic play here? For someone watching this stock, what do you do?
Right. Our verdict, based on the research, is really a wait-and-see approach. It just seems prudent right now. This is like a textbook clash, You've got this powerful short-term catalyst, the S&P inclusion, slamming right into deteriorating technicals, that shaky macro backdrop, and a really stretched valuation. It just doesn't feel like the time for bold conviction, more like careful observation. See which side wins out.
So it's a real battleground stock for the next few trading sessions then. You could see a bullish scenario where they use the S&P news, try to push towards $110, maybe even reclaim those August peaks. But then the bearish scenario, bears selling into any pop, trying to defend that $103 to $106 zone pretty hard. And if it can't hold $100, that psychological level, well, that could open the door to retesting that $90 support we saw in the options.
Exactly. It's a really fascinating setup. You just have to watch closely now. Which force wins, the headline or the trend line?
Robinhood is officially in the big leagues now, but as we've kind of unpacked here, it really has to prove it can play like a champion, not just, a rookie who got a lucky break. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.